Welcome on board Anil Agarwal, Director Finance and CFO at Titagarh Railway Systems, joining in on the show right now. Anil, hi, good morning. Good to have you today on ET Now. Solid earnings this quarter for you, but was there some bunching up or a one-off, or is this kind of growth rate sustainable, you think?
Yeah, good morning. So this quarter, actually, we have started executing a lot of private customer order, and where the margins are a bit higher as compared to the Indian Railway order. So definitely, I would not consider this as a one-off, but of course, I will also not say this is going to be continue, throughout the year. That will depend on the product mix between, once we increase the overall share of the private customer, definitely the margins are going to be in this range. But, for the Indian Railway executions, the margins would be a bit lower. So what we have always, projected or informed to everyone, like for our company, the blended EBITDA would be in the range of around 10%. And I think we would like to maintain that. And on a quarter-to-quarter basis, there may be some improvement or maybe, some decrease due to the product mix.
Okay. So, for the full year, you think close to about 3,000 crore rupees in FY23 that you clocked, and now you think a 5,000 crore rupee figure is doable for the full year?
So generally, we don't comment on the futures. But again, if you just take this quarter as the benchmark, and even if you multiply this by 4, so that gives you a run rate of 4,000 crore plus. And generally, the first half is always around 40% and the second half is 60% on a ballpark number. So definitely the target is to reach that number. But I would not like to comment again, on that number right now.
Okay, and Mr. Singhania, the last time we spoke, the order book was close to about 27,000 crores. Can you tell us what it stands at right now, and what is your order pipeline looking at? What is your targeted order book by the end of the year?
So as of now, we are again, close to 28,000 crore in terms of the order book. And again, there are a lot of tenders in the pipeline, both in the freight vertical and also in the passenger vertical. So in the passenger vertical, the two tenders which are in the public domain, one is of the MMRDA, which is for the 108 coaches, and then the Chennai Metro, which is for the 210 coaches. And then there is a talk about, MRVC tender of 238 metro trains, Vande Metro. That again would be a very large order, large tender, which could be in the tune of almost like 80,000 crore. And in the freight side, again, the Indian Railway is planning to float a tender for almost like 40,000 wagons. That again would be a large tender going forward. So expectation is that again, to grow this order book, and again, what number as of now, it's very difficult. But the company is well poised to tap on all the opportunity which will come to the company in both the freight and the passenger segment.
Apologies. So, Mr. Agarwal, can you just tell us a little bit about what your outlook is in terms of growth coming from freight wagons, or is it going to be majority from passengers? And what are the kind of margins that you enjoy for either of these segments?
So the freight wagon right now we are producing at the rate of almost around 700 wagons per month, and we have already informed that the company is planning to increase its overall capacity to 1,000 wagons per month, and which we are trying to achieve maybe by the third quarter of this financial year. So once we reach that number, so definitely the growth would be in the range of almost like 30-35% in the freight side. As far as the margins are concerned, I have already explained about the depending on the product mix between the public and the Indian Railway and the private customer order, it keeps on fluctuating, and also depending on the type of the wagon. But again, closer, I would say above 10% is something which is possible and achievable in the freight business. As far as the passenger business is concerned, again, depending on the type of the contract, as of now, we have the capacity of 20 wagons, 20 coaches per month, which we are trying to increase to almost like 850 coaches per annum. So that we are going to do in next couple of years, means by FY25, we should be ready with that infrastructure. And if you just take that potential of this 850 coaches, so the top line could be in the range of 7,000 to 8,000 crore. 7,000 to 8,000 crore. That is the potential. But again, depending upon the order inflow, depending upon the execution, So definitely the majority of the growth will come from the passenger vertical going forward. And the passenger vertical, depending upon the different types of the contract, I think EBITDA in the range of around 8 to 9% is something which we can target to achieve.
Interesting. Anil, analysts also say that PAT can become 3x in the next 3 to 5 years. Is that a realistic assumption?
So we are working towards that. I would not like to comment on the number, but again, if you see for the last past few quarters, the company has continuously improved its overall productivity, both in terms of the top line and bottom line. And now the product range in which company is operating is quite large, and the opportunity is also quite large. So definitely, we are working very hard to ensure that whatever is possible to capture at this point of time, both in the freight and the passenger vertical, we try to do that and increase our overall top line and the bottom line.
Good to know. Thank you so much for joining in and sharing with us your outlook on the kind of targets that you have down the line, what you're expecting in terms of your revenue run rate as well as order book.